Investment banking is a specialized segment of banking that helps individuals, corporations, and governments raise capital and provide financial consultancy services. Unlike traditional banks, investment banks focus on large, complex financial transactions such as mergers, acquisitions, and initial public offerings. Their expertise lies in navigating the financial markets, structuring deals, and offering strategic advice to clients. In this video, we'll break down the world of investment banking, exploring its core functions, key players, and the impact it has on the global economy. Let's start by understanding the basics and why investment banking is so crucial in today's financial landscape. Roots of investment banking can be traced back to the 19th century, when financial institutions began facilitating large-scale investments in corporate financing. Over time, investment banks evolved, adapting to changes in the global economy and financial regulations. Major milestones include the rise of Wall Street, the Glass-Steagall Act, and the globalization of financial markets. Understanding this history helps us appreciate how investment banking became a cornerstone of modern finance, shaping industries and economies worldwide. Let's take a closer look at how investment banking has developed over the years and the key events that have defined its journey. Investment banks perform a variety of core functions that set them apart from other financial institutions. These include underwriting securities, facilitating mergers and acquisitions, providing advisory services, and managing assets. Underwriting involves helping companies issue new stocks or bonds, while advisory services guide clients through complex financial decisions. Asset management ensures clients' investments are optimized for growth. By mastering these functions, investment banks play a pivotal role in connecting capital seekers with investors, driving economic development, and fostering innovation across industries. One of the primary roles of investment banks is underwriting securities. This process involves evaluating a company's financial health, determining the value of its stocks or bonds, and then helping the company issue these securities to the public or private investors. Underwriting is crucial because it provides companies with the capital they need to grow, innovate, or expand operations. Investment banks assume significant risk during this process, as they often buy the securities from the issuer and sell them to investors, ensuring a smooth transition of ownership and capital. Mergers and acquisitions, often referred to as M&A, are another major area of investment banking. Here, investment banks advise companies on buying, selling, or merging with other businesses. They analyze financial statements, assess market conditions, and negotiate deals to ensure the best possible outcome for their clients. M&A activities can reshape entire industries, create new market leaders, and drive significant value for shareholders. Investment banks' expertise in structuring and executing these deals is vital for navigating the complexities of corporate transactions. Investment banks offer advisory services to help clients make informed financial decisions. Whether it's raising capital, restructuring debt, or navigating regulatory challenges, investment bankers provide expert guidance tailored to each client's unique needs. Their advice is grounded in deep industry knowledge, market research, and financial modeling. By partnering with clients, investment banks help them achieve strategic goals, manage risks, and seize new opportunities in an ever-changing financial landscape. Asset management is another key function of investment banks. They manage investments on behalf of individuals, corporations, and institutions, aiming to maximize returns while minimizing risks. This involves creating diversified portfolios, monitoring market trends, and adjusting strategies as needed. Asset managers use their expertise to help clients grow their wealth, plan for the future, and achieve financial security. The trust clients place in investment banks is built on a track record of sound investment decisions and transparent communication. Initial public offering, or IPO, is when a private company offers its shares to the public for the first time. Investment banks play a central role in this process, guiding companies through regulatory requirements, setting the initial share price, and marketing the offering to potential investors. IPOs are significant milestones for companies, providing access to new capital and increasing their visibility in the market. Investment banks' expertise ensures that the IPO process runs smoothly and successfully. Private placements are another way companies can raise capital, often with the help of investment banks. Unlike public offerings, private placements involve selling securities directly to a select group of investors, such as institutional investors or wealthy individuals. Investment banks facilitate these transactions by identifying suitable investors, negotiating terms, and ensuring compliance with regulation. Private placements offer companies flexibility and speed, making them an attractive option for certain financing needs. Debt financing is a common service provided by investment banks, helping clients raise funds by issuing bonds or arranging loans. Investment banks assess the client's creditworthiness, structure the debt instruments, and connect them with investors willing to lend money. This process allows companies to access large sums of capital without diluting ownership. Investment banks' knowledge of the debt markets ensures that clients secure favorable terms and manage their financial obligations effectively. Equity financing involves raising capital by selling shares of a company. Investment banks assist clients in structuring equity offerings, setting share prices, and marketing the shares to investors. This method provides companies with the funds needed for growth while sharing ownership with new shareholders. Investment banks' expertise in equity markets helps clients attract the right investors and achieve their financial objective. Syndicated loans are large loans provided by a group of lenders, often organized by investment banks. These loans are typically used for major projects or acquisitions that require substantial funding. Investment banks coordinate the syndicate, negotiate terms, and manage the distribution of funds. By pooling resources from multiple lenders, syndicated loans reduce risk and make it possible to finance large-scale initiatives. Investment banks are also active in trading and sales, buying and selling securities on behalf of clients or for their own accounts. Their trading desks handle stocks, bonds, currencies, and derivatives, using sophisticated strategies to maximize returns and manage risk. Sales teams build relationships with institutional investors, providing market insights and executing trades efficiently. This dynamic environment is essential for maintaining liquidity and supporting the broader financial markets. Research is a cornerstone of investment banking, providing clients with valuable insights into markets, industries, and companies. Investment banks employ teams of analysts who study financial data, track economic trends, and produce detailed reports. These insights inform investment decisions, guide corporate strategies, and help clients stay ahead of the competition. High-quality research is a key differentiator for leading investment banks, building trust and credibility with clients. Effective risk management is vital in investment banking. Banks must identify, assess, and mitigate risks associated with financial transactions, market fluctuations, and regulatory changes. Risk management teams use advanced models and analytics to monitor exposures and develop strategies that protect clients and the bank itself. By proactively managing risk, investment banks maintain stability and safeguard their reputation in the market. Investment banks operate in a highly regulated environment, with strict rules designed to protect investors and maintain market integrity. Compliance teams ensure that all activities adhere to legal and ethical standards, from anti-money laundering measures to disclosure requirements. Staying compliant is essential for building trust with clients and avoiding costly penalties. Investment banks invest heavily in compliance systems and training to uphold their responsibility. The investment banks operate on a global scale, serving clients across continents and navigating diverse financial markets. Their international presence allows them to facilitate cross-border transactions, access new investment opportunities, and provide clients with global insights. This global reach is a key advantage, enabling investment banks to support multinational corporations and adapt to shifting economic trends worldwide. Investment banking industry is dominated by a handful of major players, often referred to as bulge bracket banks. These include firms like Goldman Sachs, JP Morgan Chase, and Morgan Stanley. In addition to these giants, there are also boutique investment banks that specialize in specific industries or services. Each player brings unique strengths, from global networks to deep industry expertise, shaping the competitive landscape of investment banking. Bulge bracket banks are the largest and most influential firms in investment banking. They offer a full range of services from underwriting and M&A to trading and asset management. Their global reach, vast resources, and extensive client networks make them the go-to choice for major corporations and governments. These banks set industry standards and drive innovation, shaping the future of finance. Boutique investment banks are smaller, specialized firms that focus on specific industries, regions, or types of transactions. They often provide highly personalized service and deep expertise in niche markets. While they may not have the scale of bulge bracket banks, boutiques excel in delivering tailored solutions and building long-term client relationships. Their agility and focus allow them to compete effectively in the investment banking landscape. Analysts are the backbone of investment banking, responsible for conducting research, building financial models, and preparing presentations. They support senior bankers in executing deals and advising clients. Analysts work long hours, often under tight deadlines, but their efforts are critical to the success of the bank's operations. This role is a common entry point for aspiring investment bankers, offering valuable experience and career growth opportunities. Associates and vice presidents, VPs, play key roles in managing client relationships, overseeing deal execution, and mentoring junior staff. Associates bridge the gap between analysts and senior bankers, while VPs take on greater responsibility for client interactions and strategic decision-making. Their leadership and expertise ensure that projects run smoothly and clients receive top-tier service throughout the deal process. Managing directors and partners are the most senior professionals in investment banking. They are responsible for winning new business, maintaining client relationships, and setting the strategic direction of the firm. Their experience and networks are invaluable assets, helping the bank secure high-profile deals and maintain its competitive edge. These leaders shape the culture and vision of the organization, ensuring long-term success. Deal process in investment banking is complex and involves multiple stages, from initial client meetings to final execution. It begins with understanding the client's needs, conducting due diligence, structuring the transaction, and negotiating terms. Throughout the process, investment bankers coordinate with legal, accounting, and regulatory experts to ensure a successful outcome. Effective project management and clear communication are essential for closing deals efficiently. Due diligence is a critical step in any investment banking transaction. It involves thoroughly investigating companies' financials, operations, and legal standing to identify potential risks and opportunities. Investment bankers work closely with clients and external advisors to gather and analyze information. This process ensures that all parties have a clear understanding of the deal and can make informed decisions, reducing the likelihood of surprises after closing. Valuation is at the heart of investment banking, determining the worth of companies, assets, or securities. Common techniques include discounted cash flow analysis, comparable company analysis, and precedent transactions. Investment bankers use these methods to provide clients with accurate, data-driven valuations that guide negotiations and decision-making. Mastery of valuation is essential for structuring fair and successful deals. Negotiation and structuring are crucial phases in the deal process. Investment bankers work to secure favorable terms for their clients, balancing interests and mitigating risks. They design deal structures that align with client objectives, regulatory requirements, and market conditions. Strong negotiation skills and creative structuring are key to closing successful transactions and building lasting client relationships. Closing the deal marks the culmination of weeks or months of hard work. Investment bankers coordinate with all parties to finalize documentation, transfer funds, and ensure compliance with legal and regulatory requirements. Successful deal closure requires attention to detail, effective communication, and strong project management. The satisfaction of closing a deal is a testament to the teamwork and expertise of everyone involved. After a deal is closed, investment banks often assist clients with post-deal integration. This involves aligning operations, systems, and cultures to ensure a smooth transition and maximize value. Investment bankers provide strategic advice and support, helping clients realize the full benefits of the transaction. Effective integration is essential for achieving long-term success and delivering on the promises of the deal. Technology is transforming investment banking. From advanced trading platforms to data analytics and artificial intelligence, investment banks leverage technology to improve efficiency, enhance decision-making, and deliver better client experiences. Automation streamlines routine tasks, while big data and AI provide deeper insights into markets and risks. Staying at the forefront of technological innovation is essential for maintaining a competitive edge in the industry. Ethical conduct is fundamental in investment banking, where trust and reputation are paramount. Banks are expected to act in the best interests of their clients, avoid conflicts of interest, and maintain transparency. Ethical lapses can lead to legal penalties and damage to reputation. Investment banks invest in training and oversight to ensure that employees uphold the highest ethical standards in all their dealings. Corporate social responsibility, CSR, is becoming increasingly important in investment banking. Banks are expected to contribute positively to society, support sustainable development, and operate with integrity. CSR initiatives may include environmental sustainability, community engagement, and ethical investing. By embracing CSR, investment banks build stronger relationships with stakeholders and enhance their long-term value. Investment banks face a range of challenges, from regulatory changes and economic uncertainty to technological disruption and intense competition. Navigating these challenges requires agility, innovation, and a commitment to continuous improvement. Banks must adapt to evolving client needs, manage risks effectively, and invest in talent and technology to stay ahead in a rapidly changing environment. Despite the challenges, investment banks have significant opportunities for growth. Emerging markets, technological advancements, and new financial products create avenues for expansion. By staying innovative and client-focused, investment banks can capture new business, enter untapped markets, and drive long-term success. The ability to adapt and seize opportunities is what sets leading investment banks apart. Career in investment banking is both challenging and rewarding. It offers opportunities to work on high-profile deals, develop valuable skills, and build a global network. Investment bankers often work long hours in a fast-paced environment, but the experience gained is unmatched. From analysts to managing directors, each role offers unique learning and growth opportunities for those passionate about finance and business. Success in investment banking requires a blend of technical, analytical, and interpersonal skills. Strong financial modeling, attention to detail, and the ability to work under pressure are essential. Communication and teamwork are equally important, as investment bankers collaborate with colleagues and clients to achieve shared goals. Continuous learning and adaptability are key traits for thriving in this dynamic industry. Work-life balance can be a challenge in investment banking, given the demanding hours and high expectations. However, many banks are taking steps to promote employee well-being, offering flexible work arrangements and wellness programs. Finding balance is important for long-term career satisfaction and personal health. Investment banks recognize that supporting their employees leads to better performance and retention. Diversity and inclusion are increasingly important in investment banking. Banks are striving to build teams that reflect a wide range of backgrounds, experiences, and perspectives. Diverse teams drive innovation, improve decision-making, and better serve clients. Investment banks are investing in recruitment, mentorship, and training programs to foster a more inclusive culture and unlock the full potential of their workforce. Continuous training and development are essential for success in investment banking. Banks offer structured programs, on-the-job learning, and mentorship to help employees build skills and advance their careers. Staying up to date with industry trends, regulations, and technology is crucial. Investment banks invest in their people, recognizing that talent development drives long-term success and client satisfaction. Strong client relationships are the foundation of investment banking. Banks work closely with clients to understand their needs, provide tailored solutions, and deliver exceptional service. Building trust and maintaining open communication are essential for long-term partnerships. Investment banks go the extra mile to ensure client satisfaction and loyalty, which in turn drives business growth. The future of investment banking is shaped by technology, regulation, and evolving client expectations. Digital transformation, sustainable finance, and new business models are driving change across the industry. Investment banks that embrace innovation, prioritize client needs, and adapt to new realities will continue to thrive. The industry's ability to evolve ensures its ongoing relevance and impact on the global economy. Sustainable finance is gaining momentum in investment banking, with banks increasingly supporting projects that have positive environmental and social impacts. This includes green bonds, renewable energy financing, and responsible investing. Investment banks are integrating sustainability into their strategies, helping clients achieve both financial and societal goals. The shift towards sustainable finance reflects changing investor preferences and regulatory pressure. Digital transformation is revolutionizing investment banking, from client onboarding to deal execution. Banks are adopting digital tools to streamline processes, enhance data security, and improve client experiences. Automation, cloud computing, and blockchain are just a few examples of technologies reshaping the industry. Embracing digital transformation is essential for staying competitive and meeting the demands of modern clients. It's important to distinguish investment banking from commercial banking. While commercial banks focus on deposits, loans, and everyday banking services for individuals and businesses, investment banks specialize in complex financial transactions and capital markets. Both play vital roles in the economy, but their functions, clients, and expertise differ significantly. Understanding these differences helps clarify the unique value investment banks provide. Summary: investment banking is a dynamic and influential sector that drives economic growth, innovation, and value creation. From underwriting and M&A to asset management and research, investment banks offer a wide range of services that support clients worldwide. The industry is constantly evolving, shaped by technology, regulation, and changing client needs. By understanding the core functions, key players, and future trends, you gain valuable insight into the world of investment banking and its vital role in the global economy.